Folks, I know you're like me. You've been waiting a while. We've been waiting on earnings season for a hot minute, but we're happy to have it back, right? We're excited. Earnings kicking off. Really, the main first big one we're talking about here is going to be PepsiCo. Obviously, a little bit late. It's all right. A little bit late. Busy day today. Everything going on today. Getting the vehicle checked out. Haircut, dentist, it's all happening in one day. You just get it all done. It's a great time. So let's look at Pepsi stock, though. It's what we've been waiting on today. Stock was up 2.3%, which all things considered is pretty darn good. They reported in the pre-market. It's good to see that because the general market was actually down today, down around half percentage. Overall sentiment pretty negative with inflation and everything, but you see Pepsi did some good stuff. So I'm going to assume here we've seen some good earnings. So let's take a peek at what we might have. So PepsiCo non-GAAP EPS here of $1.72 beats by 19 cents and $1.70. GAAP EPS beats by 18 cents. Hey, that's what I call somewhat of a nice banger of an earnings right there. I like to see that. Good profitability numbers. Anytime you beat the analyst expectations, you're doing pretty good for yourself. What's really pleasant here is when you look at the revenue line, $19.22 billion is up 20% year over year, and it's a beat by over $1 billion. Anytime you see a beat by that much, you're living large, right? Good comp, obviously, for many reasons. Well, a big part of where this comp gets so big is the fact that last year we saw, this is a prime example here, of when we had shutdown of all restaurants, all indoor seating. You weren't getting sales from restaurants from them, Typically, these places will purchase the bag in a box, which is just syrup that they put in it out of their fountain drinks. Well, that's what they do with them. Or sometimes, places will sell bottles. You weren't getting those sales. You weren't at all. Now, this year, they're able to get that. So that's where you see a good comp growth here. It's nice to see. But what's also nice here is organic growth. I'll always pinpoint it because it's kind of a focal point for them because it's one of their larger growing segments, mostly because it's one of their smaller segments. But 12.8% in organic growth versus a consensus of 7.59. So overall, nice beat there. They expected to deliver 6% organic revenue growth versus the previous mid-single-digit guidance. So a little bit higher, and 11% core constant currency EPS growth for 2021, which is good. You should expect EPS growth, obviously, over last year, which is pretty nice. They're expecting an EPS of $6.20 for the year versus a consensus of $6.09. So still a good positive bump to the guidance. So they hit on all segments here, a bump in guidance, a beat on revenue and EPS lines. They've hit all the segments here that lead to your stock going up on earnings. So nice to see that. Effective tax rate expected to stay around 21%. Cash return to shareholders at $5.9 billion. Nice to see in dividends and share repurchases. So really good scene. Let's see. Global beverage organic revenue up 21% when you look globally, and global snack organic revenue up 6%. Yeah. Wow. Constant currency operating profit increased over 80% in the organic segment in North America. It's good to see that, right? Nothing super crazy, and then they get into guidance, which we saw here. Let's dig into the press release. We like doing that. I think we can zoom in on this for you guys. I think you might like that. You might appreciate that. If you don't, I don't know what's wrong with you. I appreciate it personally, but to each their own, I guess. So, you saw obviously here quality stuff. We saw these numbers. Year-to-date growth of 14.1% in revenue. Nice to see. EPS was up 37% on the year. Good seeing that. I like seeing it. I really do. Some other fine points here. They get into some of their subsidiaries with Frito-Lay. Overall revenue change 7% growth. We like seeing 7% growth. Quaker saw a 13% decline. So Quaker, I mean, no one's buying these granola bars or something, man. We're back to school. We should be buying more granola bars. What the heck? PepsiCo up 24. Again, that's, in my opinion, due to the restaurant segment. I don't think they break it down like Coca-Cola does. I'm pretty sure they don't, but that would be where that's from. Operating profits. Quaker kind of letting them down. I can't lie. I've seen some reports, and I don't know if it's true, but obviously there was high levels of snacking at the end of last year, which is a very weird random report. I'm assuming it's based off of retail sales data, but snacking was at an all-time high in Q1 and in Q4 for them. So I don't know if that's necessarily changed at all, because you see Quaker declining and Frito-Lay only showing an 8% growth, really 7% on a revenue standpoint. Is that the case? I don't know, but just saying, I've heard good things about snacking lately, and I got some good things to snack on over here. Let's forget I said that one. We need to forget about that. Year-to-date, Quaker only down 6%, but Frito-Lay up 5%, PepsiCo up 15%. Good benefit from the restaurant. I don't think that they do. No, they don't. They don't show it, but that's all right. Expected to return at $5.9 billion to shareholders. They returned 5.8 approximately in dividends and repurchase of only $106 million. You'd expect a little bit higher repurchase, but that's their current program. Any repurchase is honestly good, in my perspective. Let's get into this balance sheet. We like looking at a balance sheet. We really do, because it makes me happy. A balance sheet makes me happy. Don't hide it from me. No. You can't hide it from me. There you are. Look, you try and hide, but I know where to find a balance sheet. Okay, I've been at this long enough. Let's look at these total current assets on this company. Currently, this is a 6 months comparison, so you're aware. Sitting at $21.5 billion compared to $23 billion of the year prior. Looks like a smaller cash position. Cash and cash equivalents went down. Might have paid off some debt, so we'll take a peek, see at that. Total assets in general, relatively flat, $92.3 billion compared to $92.9 billion. Relatively flat. I think it's mostly due to the decrease in the cash position. Nothing too crazy. From a liability standpoint, total current liabilities, not much change here. $23.6 billion compared to $23.3 billion. A little bit of an increase. Total liabilities in general, though, that's where I like to see that. It looks like they paid down some debt. 76.9 compared to 79.3 billion. So overall, you see a slight decrease here in the long-term debt obligation, or long-term debt obligation. Saw a decrease, which is good to see. And other liabilities fell a slight margin as well. Stockholder equity did increase by a decent amount, actually. 15.3 billion now, 15.4 really. If I'd like to round that up, frankly, versus 13.5, 13.55 if you want to be closer. So overall, we're seeing an increase right around $2 billion in the last 6 months, which is really nice. Balance sheet's in pretty good shape, in my opinion. I think it's got plenty of room to grow. You look at the stock itself, it's trading at a market cap of $211 billion. Take that into consideration. This company in a full year, likely going to be bringing in close to $90 billion. I think overall, she's pretty undervalued, all things considered, when you look solely based off of the market cap. PE ratio, after this, probably going to be sitting closer to, I'd say it'll be floating right around 28 after this. Based off of the increase on EPS, as well as accounting for this stock price gain, probably floating right around 28. Cheap for the general market, especially in terms of the market cap. Still with a decent dividend yield too. I like Pepsi stock. It's one that I think is worth holding. You look over the last year's performance, it's been relatively favorable for it, around 12% upward movement. Really in the last 5 years though, the stock's not done too crazy, up 40% in 5 years, not too much. This is, it's not a stock you're going to buy for an intense amount of capital gain. You just don't expect it. You can't expect that out of this kind of stock. So it's going to be a consistent player, good dividend, and I think it's fairly valued. Very good value on this. It's a great value play if you're into that. If not, that's up to you. But I'm into that, okay? PepsiCo, it's a decent pickup if you're not into the stock. That's what I got for you today. Hope you had a good one.